Hello and thank you for clicking into today's MacDesk Floor Report. The day is Thursday, July 12th, and I'm Rebecca Darst from the Market Access Center under the Bell Podium here on the floor of the NYSE. Right now we are down about 6 points in the Dow, so we're well off the lows, and we might even turn positive by the end of this report. The action today has been largely a continuation of yesterday afternoon's sell-off on the release of the minutes from the last FOMC meeting. Market participants were less inclined to love stocks after parsing the contents of the minutes, which showed a few Fed members inclined to think that additional monetary stimulus might be necessary if the recovery were to lose momentum. In other words, not only were there no imminent plans for QE3 despite ongoing disappointments in the U.S. data front, sluggish action in hiring, continued risk overhang from Europe, not to mention U.S. fiscal policy deadlock, but there's also not a strong consensus among Fed members as to the future policy horizon, and certainly not a lot of conviction that more easing would be necessary even in the face of worse data. So markets are going to get their next glimpse into the mind of the Fed when Ben Bernanke delivers his semi-annual testimony to both houses of Congress over 2 days next week. That's July 17th and 18th. Asian markets closed lower on Fed reaction as well as monetary inaction from some of the region's central banks. South Korea's central bank followed China's move of 1 week ago and unexpectedly lowered its benchmark rate by 25 basis points. But the Bank of Japan failed to follow suit, expanding its asset purchase program very slightly in what was considered a technical gesture, not really a stimulus measure as such. This disappointed the markets and set the stage for a carryover of weakness in Europe, with the euro setting the latest in a series of fresh two-year lows against the dollar, and the latest ECB monthly bulletin suggesting further risks to the Eurozone economy. This added to pressure on U.S. equity futures, and not even better than expected weekly jobless claims could do much to allay the pressure. New claims came in at 350,000 last week. This was better than the street was expecting and down from the upwardly revised prior number. Focus now turns to a pickup in earnings reports, with major financials due to get underway tomorrow with JP Morgan. Option traders are pricing in a move of nearly 5% on the earnings. That's a bigger move than we've seen over the past couple of quarters, and bear in mind that the stock has moved lower on the news for the past 3 consecutive cycles, but certainly understandable given the macro overhang and the headline risk of the past couple of months. It promises to be an eventful Friday the 13th. The volatility index is up 2% at 1836, and we will be following all of the market action as it develops. Be sure to check your inbox for the midday for the latest market reaction. For now, that's it from me, Rebecca Darst, for the MacDesk Floor Report.